Good morning, room. How you doing? So you should jump out at you what's on this chart here. That says this move off of the low, which I'm so, wait a minute. There we go. I'm disappointed, of course, that we didn't get that W bottom. And so now, let's see how this develops from here. But the move off of this low here up into the prior high, we got one piece of information that says it's likely to stall. And of course, futures do look a little different than the ETF because it's 24-hour chart. But what should jump out at you here is the fact that we've got a wide range bar from yesterday. So here was the turn down at the low, relatively wide range bar down at the bottom there. The stall, right at the 200, and then the continuation up. And then seemed like, buyers jumping over themselves yesterday to get in on the way up into resistance. So now we've got a stall there. Of course, that makes sense, but no breakdown of any kind yet. So what we look for, as we always do, is go to the 60-minute chart, and we can see that, the way it ran up, we have a void underneath. We've got some little support here, but as always, a wide range bar is a momentum move in a smaller time frame, which creates a price void. And wide range bars after multiple bars running up signal that the move is over. It doesn't mean a collapse. It just means it's going to rest, and possibly it's going to pull back sharply. What we need to do over the next several days is, see how far it does pull back. So when we get that kind of a bar, as you know, what we always do, we see a wide range bar. Oh, did it start the move? Is it signaling the end of the move? Then wide range bar is a signal of strength, of course. So now, can it go sideways? Yeah. Thank you, George. Fed day. Okay, so if they're going to report something, I guess at 2:00, we'll see with the gyrations. But even though this has already run up from this low point up to resistance, and we got the wide range bar, if buyers are going to stay in control, this will consolidate up at the top, and then it'll continue to go higher. It doesn't mean it'll collapse. It certainly might, because this is, the downtrend is now in question because of the depth of retracement. It retraced 100% of the last leg down, which we know on the weekly time frame, it's, bullish bar. That's what we had last week. And then it continued. And so, we can take a quick look at that. You got two big bars, and you can see the range expansion here has been really big on the way down and now up. And, it's up into this resistance here. And now it's going to be a wait and see, if buyers are going to stay in control, super control, and say, it's going to stay in that upper half there. And let's say it pulls back. Pulls back into here. That would be the next support level. So in any event, from an intraday trading point of view, we probably still have stocks that, we can be played on the long side. And I believe that we'll find stocks that we can play on the short side in a scenario like this. I saw a couple of ones that are gapping down, kind of ugly. I think QCOM was one of them. Why do you use bar chart on candlestick chart? I'll tell you why. And it's relative. I think you'll be surprised at why I use a bar chart here, because it's really not about candles or no candles or the bar chart. it's just because when I'm putting this data together, I can see more information with the bar chart than on a candlestick chart. It just takes up more room. So during the trading day, I'll have something, the bar charts on my 60-minute charts. But it's just basically to save or get a little extra room where I squish this together. And then if I turn it into a candle chart, the bars will be on top of each other. So that's really the only reason. And I can see what's going on here in that way. So, that's where we're at here. We'll have to monitor this. I mean, these were able to, got through the 200, the 50 is right there. Good morning. And so I think we're stuck here, and any breakouts from this point, keep in mind, any breakout in a scenario like this is likely to come right back in your face. It's a bad situation for breakouts to continue. So even if this pokes higher here, remember, this is a new bar. If this pokes higher here, it's likely to come right back in, especially when it bumps its head on that 50 MA. And greater than 100% retracements are pretty common, where you'd say, okay, it's going to stop there, but a lot of times it'll poke right through it and then it'll come in. So keep that in mind. NASDAQ futures obviously underperformed. They're not up to that high. As we looked at the S&Ps, it didn't get quite up there. So, we know the FANG stocks have been, beaten down. Apple is broken down. And so, we've got those major stocks that were pushing the NASDAQ higher damaged. So, sign of weakness there. The Dow, actually, remember I said yesterday, I thought, is it possible this thing could make a new all-time high? And wouldn't that be the suck-in, for, the novices and majorities to hear that the Dow made a new all-time high. And meanwhile, the other indices have all been damaged and the FANG stocks have been damaged, the leadership. And yeah, well, Cisco came back and, I gave that one up yesterday. It was underperforming. And then I sold out and it turned around. It had a pretty nice day. It goes that way sometimes. It had a nice day, but it was underperforming early in the morning, and then whatever, it played catch up. So be it. What can you do? But yeah, so can this Dow, does that happen where, the media, new all-time high, blah, 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 after the election and so on. And meanwhile, we know that, like the Russell here has just been smashed and still underperforming. It began to turn around early. In any event, there's a lot of underperformance going on here. And Dow now is, I think possibly if it does make that, it really just masking the danger that's lurking underneath. So just take a look at our internals here quickly. Our breadth internal has reached an extreme, but sentiment is dead neutral here. So what we look for is these to be in alignment to call a top or to know that we're in the area of a top. So what I'm interested to see here really is, can these spiders and the broader markets hold up here a bit? Even if they poke up today, I really think they're going to hit their head on that 50 and they're going to come back in again, and we're going to get some chopping around from there. But the misalignment here, if you will, does say that, potentially this could continue to push higher, because what we look for is the sentiment to reach an extreme. And with sentiment reaching an extreme, and this was actually kind of a positive sign that it was able to get to this level of 211. Because in a truly weak market, this would have been to 100 or so. So if we scroll back a little bit, it's kind of been some time before it's hit that level. So it is a sign of strength, that the fact that it was able to get to that point. And the wrong way option traders, they're not all in yet. And historically, that's what it takes for them to get all in. And so the timing of that, just considering, what we just reviewed, would suggest if it was going to happen, I think it would be next week. So maybe we get some chopping and then the market continues higher. This pushes up. This gives us a divergence, kind of like what we saw here with the higher low and the lower low there. And, that kind of sets up, maybe at that point, a bigger pullback. We do have the bullish seasonal period here, the Christmas rally and so on. So from my own, just thinking what would be ideal for making money. I think that's our focus here. Well, it would be some type of correction, in the next week or so. It kind of pulls this in a little bit and this breath coming off and maybe a pullback and consolidation here and then a push higher. And then we see what stocks have shown relative strength through that. So we'll see how it all plays out. And we looked at the Dow bonds here up a little bit. They're just kind of flip-flopping around here in a downtrend. We'll see if they continue to go lower. Oil, wow, that was green for a while yesterday, and now, topping tail. Is that a hammer to make a bottom? Well, just lower high bars here. Looks like $60 would be where it would go. That's where I would be thinking, obvious place, big round number, and so on. Gold doing nothing here. But holding up, still in the upper half of that wide range bar. Nothing to do. If you're in it, it's just a hold at this point to see if, we got another wide range bar kind of dipping down below the halfway point a little bit here. But if this was to turn into a green bar today, that would be a positive sign. Down here, and you just got a big mess going on. So we shall see. And anything else of note here before I let Dan take it over from yesterday? Financials were all over back and forth. And, we see, this coming up into the 50. Energy actually holding up pretty good considering the collapse in oil, but it's been pretty whippy and erratic. FDN, it's damage, Amazon and Facebook and so on, and Google. And we had that Amazon trade yesterday, and we got out of that properly.
Facebook.
Facebook, when it didn't continue to move higher intraday. But, I pointed out a pattern similar to this in the room yesterday, and in Win. Let's just take a look at that. Because this is a great pattern in an uptrend. It's a great pattern when these moving averages are pointing up. But historically, my own experiences, it's been a disappointment as a bullish pattern, wide range bar consolidation at the top and starting to move up. And, boy, did it disappoint. And this was on earnings, of course. But just generally, it's a pattern that does not follow through as it historically does when these moving averages are pointing higher, because it's a great pattern when it is.
Yeah, and that was a fantastic lesson. I had it on my, wish list long, provided it opened flat or up a little bit because of the oversold weekly also.
Yeah. But I mean, again, as an intraday trader, I would not shy away from this pattern. I can control my risk, of course, because it's not overnight. And that was the thinking on Facebook when I did it, because it's not the exact pattern, but a gap.
Correct.
Right? A gap like this is the same as a wide range bar. It's a momentum move. So, and here was the little pullback type of hook where it was turning higher. And so then at the time when I was long it, and I said in the room, you know what, this thing is acting like, maybe, trying to drag a bulldozer up the hill the way, I should have had, $1.50 profit in the blink of an eye. That's kind of like the way $150 stock is supposed to move when buyers are taking control in the institutions, rather than it was like in the comment I said that this is like nervous day traders that are in this thing right now. And as soon as we got out, it collapsed. So,
hey, Greg, let me ask you something, because you just brought up a point that I remember asking you a few weeks ago when I was watching your new awesome swing trading course on gaps. And I remember asking you the exact question. I said, hey, if I were a student, I would wonder the following. And you just answered it. And so let me elaborate. Comparing this pattern to WIN, which had the wide range bar and little hook pattern in the upper 1/3 as a consolidation of a big move, you just said, well, the gap actually has the same effect of that wide range igniting. And that would have been my question as a student, that yes, I interpret it the same bullish way, but one is created with a void of price action because of a gap, and the other one was created by a wide range bar through multiple buys and sells, creating the WRB.
Right. So I think you're stating, the fact of what it is wasn't a question. I thought a question.
No, right. No, but I just wanted you, if you have any other comments on that. Well, gave the conclusion, but so you're just saying, yeah, view them the same, end of story.
Yeah. So the thing is, here's the gap. Right? Well, that's overnight.
Because one has intraday price support. So,
well, the thing is, yes, if you went down to a smaller time frame, you'd find some kind of support. But the thing is, when you get a wide range bar, let's just say,
correct, right,
this here,
right,
the prices are moving so fast that there is no consolidation or pullback. So the essence of it is, while you can see bars, there's nothing to trade against because there's been no consolidation. So where would you place a bid, or, if you wanted to buy it or look for stabilization and then buy it? So whether it's a gap or a wide range bar, you really don't have anything. So you interpret them. They're not exactly the same, but the interpretation is the same.
Right.
Where this gap up showed strength, but there's really nothing underneath it. Same, go back to WIN.
Okay, so just to finish the subject, you kind of treat them pretty much darn equally. There's not a preference of the wide range bar.
Right. So once it forms whatever, the gap or the wide range bar, you then monitor what it does. With any wide range bar, like I said, is it staying in the upper half and ideally the upper third? Right. So if it doesn't, there's nothing underneath it to stop it. If it can, fine.
Right.
So this little hook, again, is a nice little pattern, but if you get it with the moving averages facing up with a void, it's a fantastic pattern.
Sure.
This just tends to be a disappointment. Anyway.
All right. Very good.
All right. All yours.
All right. Thanks. And just FYI, folks, I just put a little PowerPoint lesson on pro gap of SEND, S-E-N-D, that we found during scanning yesterday. I put that on our Facebook group. And it's just was an awesome multiple time frame and alignment trade. All right. I'll try to go a little quick here. We have a lot more opens than a few days ago. CRM put spread is fine. Adobe put spread fine. EOG put spread fine. Oracle, we've sold 2/3 of our position for nice profits. Dove put spread fine. Ross put spread and covered call. That looks great. Can't take that call now. Fizzler, we have a call spread. XLP puts, no, oh, sorry, didn't change. XLP. Put spread looks great. Visa put spread looks great. Did I miss any? SCS, we're long stock. Sienna, we have nothing. We're waiting for a pullback. Moss, I'm looking for a pullback. I like the monthly breakout. Devon, nothing yet. GWPH, we have a cover to call, and I did a put spread myself. Yext, we are watching today. Look at that, Jimmy. Nice pre-market strength in a weekday. I'm going to put that in a window. I already have it in a window. That looks fantastic. Oh, and IWM. We have a put spread, one both for tomorrow and one for next week. Let's look at some gappers here. We got 6 minutes. WMGI, 29 bucks. It's gapped into resistance, but very deep. That's a 30-minute high candidate. Zayo gapping down 25 bucks. Very bearish. I need more information. 21 bucks, bearish. Need more information. AYX, 68 bucks. Woo. Whoa, that's gapping all-time highs. But get a $10 gap? What do you want me to do with that? I need more information. Now, this also was a beautiful multiple time frame and alignment. And so, Greg, this is actually kind of a derivative of WIN. You know, it's in a downtrend, but we got this bullish action right here. And the weekly, it broke support, you know, broke its uptrend by a lower low. I get it, but it's a climactic buy setup with a bottoming tail range engulfing. This would have been on my list today as a long over these highs. I got a price for it, but it's gapping up to 55 bucks, so nothing to do. Nice 112.